All right, hey everyone, this is DayTraderRockStar. Thursday night going into Friday, the day before the 3-day weekend for Happy 4th of July, everyone. Tonight, actually, I want to do a kind of an educational video that has to do with today's markets, and I think you'll find this very interesting. Now, my methodology when I trade stocks, I use a series of indicators to quote keep me out of more trades than get me into. Now, that sounds a way, but the only reason I say it that way, I mean, you could say it either way. You could get us into a trade or get us, keep us away from a trade. But, in the volatility, the reason I say to keep us away from a trade, because I want to take the best trade. I know there's a lot of opportunities in the market, but I always want to try to get the odds as best in my favor for the direction of the trade I'm going to take. So I use these 5 indicators usually to time me. I want to get them all set up at the perfect area where I know there's the best opportunity for a market move. And so just going to back test them right here and actually show you some really interesting stuff in the S&P and how the S&P is shaping up now. Over the last, actually since the correction in April, that last pullback we came was an oversold stochastic bounce. We're double bouncing here on the stochastics. I remember, looking for a long position in the market at that time, and it ran right up here to the 50-period moving average, and right when those stochastics crossed over, that was the sell signal, and it's just as clear as day. It was clear, and what really made this interesting is because there was a 50-period moving average, the stochastics also gave that crossover. We had a nice extended rally, and then when that happened, we put us in this type of channel right now. Now we've kind of established a channel, and this channel line really didn't come into play until earlier this week, and you couldn't really even determine that. But what I was seeing is, then all of a sudden this pitched up. I said, all right, this market's pulling back. We've broken down through the 1050 area. We're going to be breaking down, but we have also moved down quite a bit, and we deviated from the 20-period moving average. So there was a couple possibilities, and all of a sudden this trend line appeared, and I said, well, this is what's going to happen. We're going to probably sell off underneath that trend line, and then close back above it. The closing price was the key to today. The closing price in the rally off the lows, putting in this nice candlestick, this hammer reversal pattern is very important because it falls in line with the history of this type of movement in this stock. So we're going to go back and we're going to look at the 4 times this market recently rallied off of a pullback, and we're going to apply the 5 indicators to it. First of all, the stochastics are on underneath the 20 mark, which I would consider an oversold level. In this case, there is. All right, we have a pullback. We pull back to the 200-period moving average on the price. The price actually pulled back down here, and we bounced right off the 200. But we also had that oversold indicator. And this is, a random move. But really, what showed up here is the candlestick, the hammer. And a hammer is a very bullish candlestick, and we had a nice crossover. So everything pointed to this rally. We moved all the way to April, and the flash crash here. Basically, that was the thing. But the follow-through day, we came down to the 200-period moving average and bounced off of it. So, again, but the stochastics were back down in that 20 range, right down back at 20 before we bounced. So, very nice bounce here. We got a nice crossover. Turned over. It couldn't get to the 20. Broke all the way down here. All right, mid-May, we come down here. We bounced twice. Actually, the second bounce is a very aggressive hammer candlestick again. And again, really confirms this trend line. Actually, starts to put in at one point of that trend line, but you're starting to see that there is a trend line here. It really comes into play right here. So right when you have here, again, you have a candlestick. It's kind of a piercing pattern. It's a bullish piercing pattern. Very similar to that. And from that point, we rallied up until, again, the recent pullback, which was a stochastic indicator sell-off. And we pulled all the way back. Now we've come down to, right to this trend line. And last night we were talking about watching the market come down, to the 1020 area. Actually, we flushed a little bit lower than that, all the way down to 1011. But the important thing was to close back above the 25, 1025, or that lower trend lines. This looks really good going in. Again, the same situation that's happened in today's, today we have oversold stochastics, lower trend line support, bullish candlestick, and a patterned trade. And the patterns are very important. So if we go back out here, each one of these situations, we're in the same exact situation. We got a nice rally from that. So everything leading up to this. Now, remember, we have employment news tomorrow, Friday, and that's gonna be something that's it's gonna turn the whole apple cart upside down. But I think everyone's expecting real bad numbers. I think a lot of people are expecting lower numbers here on the market. Even the S&P 500 or S&P came out and cut the S&P 500 and said we should what do you call it? Take some of your holdings off the table for not 45%, but 40% in equities now. So we'll see. We'll see if all this bearishness helps this rally, and we'll see if this gets a follow through tomorrow. Because if we do get the follow through tomorrow and get that bullish crossover in the stochastics, this overall pattern, believe it or not, is a very bullish wedge pattern. And coming into 75% of completion of that pattern, there's a good chance we can actually rally out of this pattern. And that's a long shot, but that's definitely something to be seen later on if we are up at this level again. And I would definitely be really including this whole pattern as a positive force to move up here. So that's it. I wanted to get this out to you. Just remember, stochastics oversold. Major moving averages 20, 50, 200. Trend lines, once they establish themselves by 2 points, and you can confirm them or make them stronger by any additional points, the stronger they are, the better they're going to hold up. Overall patterns, bullish patterns, channels, wedge patterns, and recent support and resistance lines, which you could go back out. Self-explanatory. Recent support, recent support, recent support. So you can see how that line held up. And another reason we bounced off at this level. So tomorrow looks good. I know the job report's there. We'll see what happens with that.